All right, let's jump right in. We're about to take a journey into a hidden corner of the financial world, a place that operates way beyond the daily chatter of the stock market. We're talking about the new frontier, alternative investments.
That quote just hits the nail on the head, right? It suggests there's a whole other game being played out there, a frontier where the rules are just different and the opportunities are massive. So, what exactly is this frontier?
Well, for starters, it is absolutely enormous. Projections show the market for these alternative investments is going to hit $26.4 trillion by the end of 2025.
But it doesn't stop there. It's not even slowing down. The forecast then jumps to $29 trillion by 2029.
And then you've got investment giant BlackRock predicting it'll cross the $30 trillion mark by 2030. The takeaway here is really simple. We are talking about a gigantic, and I mean gigantic and rapidly growing piece of the global economy.
So to help us get our heads around this, here's the game plan. We're going to start by defining this new frontier. We'll break down what alternative investments actually are, take a look at how they work around the globe, get into the rules of the game, and finally, explore how this future is opening up for everyone.
So let's get right to it. What on earth are we even talking about when we say alternative investments? Well, the simple answer is it's pretty much anything you can invest in that isn't your classic stock, bond, or just plain cash.
The alternative universe is incredibly diverse. You've got things like private equity, which is basically investing in companies before they hit the stock market, and private debt, which is kind of like being the bank for those companies. It covers hedge funds, massive real estate and infrastructure projects, think airports and bridges, and even things like commodities, fine art, and, yep, you guessed it, crypto and NFTs. It is a huge bucket of really different assets.
Now, this is where it gets really interesting, because you see this fundamental tension at play. On one side, you've got these powerful forces pulling investors in. Everyone's looking for higher returns in the stock market, they need to diversify their risk, and new platforms are making it easier to get in. But on the other side, you've got some serious hurdles. The deals are super complex, good data can be really hard to come by, and the whole space is sensitive to shifting regulations and what's happening in global politics.
That brings us perfectly to our next section, because this isn't just one single market. Nope, it's a global patchwork with very different rules and trends depending on where in the world you are.
The big story is all about democratization. There's a major executive order on the table that could potentially open the floodgates for alternative assets to be included in retirement accounts, like 401ks. This could literally bring millions of new investors into the game.
Meanwhile, over in Europe, the picture is a bit messier. Since Brexit, the UK and the EU are basically going their separate ways on regulation. For fund managers, that means navigating two different sets of rules, which creates some real challenges, but also some new, unique opportunities.
Then you look at Asia, and the trend is all about alignment. Major financial hubs like Singapore and Hong Kong are working hard to update their regulations to match global standards. And the goal is crystal clear: attract more international money by making their markets more transparent and predictable for investors.
And of course, sometimes geopolitics just throws the entire rulebook out the window. Take Russia, for example. EU and US sanctions have effectively blocked new investments and securities sales involving Russian entities. This has created a very distinct, largely isolated market, and it's a stark reminder of how global events can completely reshape the investment landscape.
So you've got this massive, globe-spanning market. What's the catch? Well, historically, the price of entry has been incredibly high, and it's all defined by some very exclusive and, complex fee structures.
And this slide lays out the classic model, the infamous 20 and 20 rule. For decades, this was the gold standard for hedge funds. You, the investor, would pay a 2% fee every single year on your total investment, plus a massive 20% cut of any profits the fund made.
But things are changing. That classic model is feeling the pressure. Today's industry averages are noticeably lower. Those management fees, they've dropped to around 1.5%. And the performance fees are now usually somewhere between 16 and 19%. This whole trend has a name: fee compression.
So what's causing this? Why are fees falling? In a word, power. Bargaining power. The biggest players in this market, we're talking large pension funds, university endowments. They're incredibly sophisticated. They have the clout and the know-how to demand better deals, pushing for lower fees and a lot more transparency.
And that power shift brings us to our final and maybe the most important section of this whole story. Because the future of this market isn't just about big institutions anymore. The entire profile of who can invest is going through a radical transformation.
For the world's wealthiest families, this isn't some new thing. It's standard practice. Their family offices, on average, put almost half, 45% of their portfolios into private alternative investments. They are already deeply, deeply in this world.
And it's not just the ultra-wealthy. Check this out. Financial advisors, the people who manage money for millions of regular individuals, they are all in. A stunning 92% already use alternatives, and 91% of them are planning to use even more. This is a massive shift in mainstream financial thinking.
And this is where it all comes together. All the trends we've been talking about, the regulatory shifts in the US, the rise of new fintech platforms, they're all converging. They're breaking down the old walls and making this once exclusive club accessible to a much, much broader audience of individual investors just like you.
Which leaves us with one final big question. We started by calling this the new frontier. So, as that frontier opens up to everyone, maybe the nature of risk itself is changing. Perhaps the biggest risk is no longer just about the investments you lose money on, but about being left out of the game entirely.